Okay, next is module number 4, financial ratios. So, the information contained in the 4 basic financial statement na dinascuss natin noong nakaraan is of major significance to a variety of interested parties who are regularly needed yung ating mga statements na yon, no? In order to view or to measure the company's performance. Relative to the keywords here, because the analysis of financial statements is based on the use of ratios or relative values. Ratio analysis involves methods of calculating and interpreting financial ratios to analyze and monitor the firm's performance. The basic inputs to ratio analysis are the firm's income statements and balance sheets. So, sino-sino yung mga interested parties? Yan, nabanggit ko to kanina. So, ratio analysis of a firm's financial statement is of interest to shareholders, number 1. Creditors, number 2. And number 3, the firm's own management. Okay? Both current and prospective shareholders are interested in the firm's current and future level of risk and returns. Ako man to guys, no? Ako man yung shareholders, gusto ko malaman yan. Siyempre, gusto ko makasiguro kung kikita ba o hindi. Baka masayang yung pera ko. The firm's creditor are also interested primarily in the short-term liquidity of the company. Siyempre, makakapagbayad ba to pag pinautang ko, di ba? And the ability to make interest and principal payment. A secondary concern of creditor is yung profitability. Siyempre, they also want an assurance that the business is healthy. Kasi papautangin mo eh. Management, like stockholders, are also concerned with all aspects of the financial institutions and attempts to produce financial ratio that will be considered favorable by both owners and creditors, and in addition, the management uses ratios to monitor their performance. Yan, from period to period. Now, ito yung types of ratio comparison. Cross-sectional analysis. Ratio analysis is not merely the calculations of a given ratio. Ang importante kasi dito, how do you interpret the value? Parang gato yan eh. 1:1. Ano naman yung 1:1? Ano ibig sabihin nun? Diba? O kaya lumabas 35%. Ano ibig sabihin ng 35%? 1.85. Ano ibig sabihin ng 1.85? So, ang bali wala lahat ng calculations kung hindi mo alam ang interpretation. Okay? Okay, sige. Isa-isa natin siya. Okay, so cross-sectional analysis. Cross-sectional analysis involves the comparison of different firms' financial ratios at the same point in time. Okay? Analysts are often interested in how well a firm has performed in relation to other firms in the industry. Take note of the term, how they perform in relation to other firms in the industry. Ibig sabihin, ang tinitingnan natin, hindi lang yun sa atin, kundi kinukumpara din natin to doon sa iba. Pero syempre pag nagkumpara ka, dapat on the same category. On the same category. So, ang tawag nga natin dito ay benchmarking. Yan. Kasi mahirap yung mag-compare ka ng magkaiba. Kunwari, A, ko-compare mo kay B. Yun, pwede. Pero kung A, tapos A+, ay malabo yun. Alam na natin na may malaki ang difference. So, dapat yung pareho. Okay? So, yun ang isang bagay na dapat natin tandaan. Kailangan, pag nagano tayo, pareho. So, benchmarking is a type of cross-sectional analysis in which the firm's ratio values are compared with those of a key competitor or a group of competitors that it wishes to emulate. Kasi nga, pareho. Okay? You have the same, you have the same level. Okay? Hindi tayo pwede mag-compare sa isang malaki sa isang maliit. Alam na natin ang resulta. Diba? Hindi niya kakayanin in terms of finances, in terms of capacity. So, bali wala yung gagawin natin. So, this is an example, ayan, ng financial ratios ng mga kumpanya. Yun. So, dapat on the same category. Kasi kung hindi, sayang lang. Okay? The second is yung time series analysis. Si time series analysis evaluates performance over time. So, comparisons of current to past performance using ratios enables analysts to assess the firm's progress. So, kumbaga, tinitingnan natin yung trend. Oo. Developing trend. Yun. Can be seen by using multi-years comparison. Kasi, makikita mo yung financial performance through trends. So, meron na tayong dinatawag, di ba, yung trend analysis. Yan. Combined analysis, so most informative approach to ratio is to combine cross-sectional and time series analysis. Siyempre, di ba, talagang, kasi makikita mo talaga yung performance. Okay? Next is yung cautions about using ratio analysis. Number 1, ratios that reveals large deviation from the norm merely indicate the possibility of a problem. Yan. Additional analysis is typically needed to determine whether there is a problem or to isolate the causes of the problem. Kasi kung minsan may pagkakataon lang talaga. Okay. Pangalawa, a single ratio does not generally provide sufficient information. Kaya nga kailangan may series. Oo. Kaya importante na tignan din natin yung time series. Okay? Sasabi, if an analysis is concerned only with certain specific aspects of the firm's financial position, 1 or 2 ratios may suffice. Oo, kasi kailangan. Pero kung kung financial position lang, kung gusto mo lang malaman ano ang status niya ngayon, pwede yung isa. Pero kung gusto mo malaman how stable they are, hindi pwedeng isa lang. Kailangan mga dalawa. Yun. The ratios being compared should be calculated using financial statements dated at the same point. Yun. Hindi pwedeng, di ba, katulad ng mga nagsasabi, nakakatawa, kino-compare nila yung presyo ng gasolina noon at ngayon. Ang laki ng diferensya nung noon sa ngayon. Sabi, nung panahon ni ganito, ganito lang ang gasolina. Panahon ni ganito, ganito gasolina. Magkaiba naman yung market condition nun. Magkaiba yung time. Although parehong gasolina, pero magkaiba yung market condition nun. So, hindi yun tamang i-compare. Maling-mali. Now, next, number 4. It is preferable to use audited financial statements for ratio analysis kasi ibig sabihin na check na. Audited Okay? Kasi ito ibig sabihin na check na ng external auditor. Kaya kumbaga hindi bias. Okay? The financial data being compared should have been developed in the same way. Dapat. Kaya nga sabi ko sa inyo, dapat yung condition is the same. Hindi po pwedeng magkaiba. Baliwala yung comparison natin kung magkaiba yung scenario. Magkaiba yung instances. So, dapat kailangan pareho. Results can be distorted by inflation, which can cause the book values of inventory and depreciable assets to differ greatly from their replacement value. Ayan. So, ito yung mga titignan natin na quotients. Okay? Ito na. Categories of financial ratios. So, meron tayong 5. Okay? There are 5 general categories. Liquidity, activity, debt, profitability, and market ratios. Okay? So, ito yung titignan natin. So, as a rule, the inputs necessary for an effective financial analysis include at a minimum the income statement and balance sheet. Yan dalawang yan ang kailangan natin. Okay, kailangan natin. Kasi pagka nagano tayo ng financial ratio, itong dalawang to ang bida. Yun yung kailangan na meron tayo pagka nag-compute tayo ng mga ratio. So, doon tayo muna kay number 1, liquidity ratio. The liquidity of a firm is measured by its ability to satisfy its short-term obligations as they come due. Liquidity refers to the solvency of the firm's overall financial position or the ease with which it can pay its bills. Kasi nga, di ba, sabi natin kanina, liquidity, ibig sabihin, you are very convertible to cash. So, ibig sabihin, kung ikaw ay liquid, no, you can easily convert cash, okay? At mas madali kang makakapagbayad. Okay? Ayan. So, clearly, it is desirable that firm is able to pay its bills. So, having enough liquidity for day-to-day operation is important. So, ano yung two basic measures of liquidity? The current ratio and the quick acid test. Or quick ratio sa iba. Iba kasi quick acid test yan eh. Current ratio measures of liquidity calculated by dividing the firm's current assets by its current liabilities. Now, in this example, so 1.97. A higher current ratio indicates a greater degree of liquidity. How much liquidity a firm needs depends on the variety of factors, including the firm's size, access to short-term financing, sources like bank credit lines, and the volatility of its business. Ibig sabihin lang nito, no, for every 1 peso, meron tayong 1.97. Kumbaga, for every 1 peso na liability, meron tayong corresponding asset na 1.97. So, mas malaki yung asset. Yan. Quick asset test ratio measures of liquidity calculated by dividing the firm's current assets minus inventory by its current liabilities. Okay? Generally, low liquidity of inventory results from two primary factors. Many types of inventories cannot be easily sold because they are partially completed items. No? May mga special purpose items. 2. Inventory is typically sold on credit, which means that it becomes an accounts receivable before being converted into cash. So, ito naman yung kanyang computation. Current asset less inventory over current liabilities. So, 1.51. As with the current ratio, the quick ratio level that a firm should strive to achieve depends largely on the nature of the business it operates. The quick ratio provides a better measures of the overall liquidity only when a firm's inventory cannot be easily converted. So, ganun ulit. For every 1 peso liability, meron siyang 1.51 of the current assets and current assets. Next is the activity ratios. Ang activity ratio measures the speed with which various accounts are converted into sales or cash. Okay? Or either inflow or outflow. In a sense, activity ratio measures how efficiently a firms operate along a variety of dimensions, such as inventory management, disbursement, and collection. So literally, what is being measured is the activity. Okay? So medyo marami-rami ito. Una, inventory turnover. Measures the activity or liquidity of a firm's inventory. So tulad dito, cost of goods sold divided by inventory. So it's 7.2. The resulting turnover is meaningful only when it is compared with that of other firms in the same industry, okay, or to the firm's past inventory turnover. An inventory turnover of 20 would not be usual for a grocery store whose goods are highly perishable and must be sold quickly. Ano ibig sabihin nun? Perishable na tapos nabenta in 20 days. Ang tagal. Okay? Kaya sabi niya, another inventory activity ratio measures how many days of inventory the firm has on hand. So ito naman yung average age of inventory. Dividing it by 365. So dito, 50.7 days. This value can be viewed as the average number of days sale in inventory. So, ang tagal. Diba? So, ito rin, no, matagal. Okay? Ang turnover is in 7.2 days. So, matagal. Average collection period. The average collection period or the average age of accounts receivable. This one is useful in evaluating credit and collection policy. So, it is arrived by dividing the average daily sales into the accounts receivable balance. So, tulad nito. Ayan. So, average collection period, accounts receivable over average sales per day. So, para makuha yun, ang average sales per day is annual sales over 365. So, dito, it's 59.7. Now, 59.7 days to collect accounts receivable. So, ang tagal. Okay? Mahina yan, poor, kung supposed to be, 30 days lang dapat. Halimbawa, ang binigay natin sa kanila is payable in 30 days. Pero nakokolekta natin sila in 59.7 days. Ibig sabihin nun, poor ang ating credit department. Yung collection policy is poor. Kasi supposed to be dapat in 30 days nakuha mo na yan eh. Pero hindi, lumalabas. Halos in 2 months time bago nakuha. Okay lang yan kung ang binigay natin na term is 60 days. Ibig sabihin, pasok dun sa 60. Pero paano kung ang binigay mo lang na credit term 30 days? O, di lumagpas na siya dun sa 30 days. Ibig sabihin, inefficient. Okay? O, kaya sabi ko sa inyo guys, importante na malaman mo kung ano yung interpretation niya. So, ibig sabihin, kung supposed to be 30 days, pero nakukuha in 59 days, there is a need for improvement. Yan, para sa ating collection ng ating accounts receivable. Okay. Next is the average payment period. The average amount of time needed to pay accounts payable. So, yung pagbabayad naman natin. Sabi nga natin, importante na makapagbayad tayo. So, ito naman yung formula. Ayan. So, ito naman, 95.4 days. O, diba? Grabe. Grabe, guys. 95.4 days. Ibig sabihin, ang average payment period natin is in 95.4 days. Ang tagal din pala natin magbayad. Ito naman, total asset turnover indicates the efficiency with which the firm uses its assets to generate sales. So, asset turnover equals sales divided by total sales. Ito yun. Ayan. Which means the company's turnover, its asset, at 0.85 times per year. Yun lang. Then, debt ratio. Debt positions of a firm indicates the amount of other people's money being used to generate profit. In general, the financial analyst is most concerned with long-term debts because this commits the firm to a stream of contractual payments over the long term. The more debt a firm has, the greater its risk of being unable to meet its contractual debt. So, ano ba ibig sabihin? In general, the more debt a firm uses in relation to its total assets, the greater its financial leverage. Financial leverage defined as the magnifications of risk and return through the use of fixed cost financing, such as debt and preferred stocks. The more fixed cost debt a firm uses, the greater will be the expected risk and return. Natural. Kung ilang percent, halimbawa, majority o 50% ng iyong investment ay galing sa utang. mahirap talaga yun. Diba? Mas dangerous yun. Okay? Mas maganda sana kung konti lang, 'di ba, ang galing sa utang. So, there are two general types of leverage measure. Yeah, the degree of indebtedness measures the amount of debt relative to other significant balance sheet amounts. The second one is the ability to service debts, which reflects a firm's ability to make the payments required on a scheduled basis over the life of a debt. Yan. So, the term to service debt simply means to pay debts on time. So, titingnan natin. Debt ratio. Yan. Debt ratio measures the proportions of total assets financed by the firm's creditor. Yun. The higher this ratio, the greater the amount of other people's money being used to generate profit. So, halimbawa dito, 45.7%. O, ganun kalaki ang total debt ratio natin. Okay? 45.7% of the 100% ay galing sa creditor. Is being financed by the creditor. So, medyo malaki yan. So, alam nyo na, sabi, mas mataas to, mas risky. Kasi ibig sabihin, 45.7% ng ating investment o assets ay galing sa ibang tao. Galing sa preferred stock nila, no? O kumbaga, in short, ay galing sa pinautang sa atin. Okay? Debt to equity ratio. The debt to equity ratio measures the relative proportion of total liabilities to common stock equity used to finance the firm's assets. As with debt ratio, the higher this ratio, the greater the firm uses its leverage. The debt to equity ratio is calculated this manner. Total liabilities divided by common stock equities. This result tells us that for every $1 common stockholders have invested, the company owes about 94 cents to creditor. O di ba, ang laki? Ang laki ng ating pinagkakautangan. 94%, no? To the creditor. So, 7 cents lang ang sa atin. Ganun lumalabas. Times interested earning ratio, sometimes called as the interest coverage ratio, measures the firm's ability to make contractual interest payments. The higher its value, the better able the firm is to fulfill its obligation. Ibig sabihin, mas makakapagbayad tayo. Okay? Mas kakayanin natin makapagbayad. Okay? So, tulad nito, ayan, it's 4.49. So, maganda. Ibig sabihin, may capability tayo to pay. The fixed payment coverage ratio measures the firm's ability to meet all fixed payment obligation. Nakadikit. Such as loan, interest, and principal. So, ibig sabihin, mas okay. Ayan. So, dito, it's 1.87. Okay? So, ibig sabihin, okay pa tayo. May kakayanan pa tayo makapagbayad. Next is the profitable ratio. So, measures enable analysts to evaluate the firm's profit with respect to a given level of sales. Okay? Profitability ratio, respect to a given level of sales, a certain level of assets, or the owner's investment. Without profit, a firm could not attract outside capital, natural. Sino ang maiengganyo mo na mag-invest kung walang kita? Okay? Kaya owners, creditors, and management pay close attention to boosting profit because of the great importance the market places on earnings. So, ano yung mga ratios na to? Yan. Gross profit margin. The gross profit margin measures the percentage of each sales dollars remaining after the firm has paid its goods. The higher the gross profit margin, the better. Okay, so ganito siya. Gross profit margin is sales minus cost of goods sold over sales. So, dun sa example nga natin, it is 32.1%. Yan. So, ang gross profit margin natin ay medyo malaki. Okay? So, okay siya. Diba? Okay siya. Kasi malaki yung ating gross profit margin. Siyempre, kung ako man yung investors, gusto kong tingnan yan. Gusto kong malaman yan. Okay? Ayan. Next is the operating profit margin. The operating profit margin measures the percentage of each sales dollars remaining after all costs and expenses other than interest, taxes, and preferred stock dividends are deducted. This one represents the pure profit earned on each sales dollar. Operating profits are pure because they measures only the profit earned on operations and ignore interest, taxes, and preferred stock dividends. So, the formula is operating profit divided by sales. So, it is 13.6. Yan. So, okay pa rin yan. Net profit margin. The net profit margin measures the percentage of each sales dollar remaining after all cost and expenses. So, this time, ini-include na natin yung taxes and preferred stocks. Okay? Yung interest kasama na rin. So, it is calculated as earnings available for common stockholders divided by sales. So, the answer here is 7.2%. Okay? So, okay pa rin naman. Earnings per share, generally of interest to prospects or prospective stockholders, syempre. Kasi gusto natin malaman, no? Teka, magkano ba kikitain natin per share? So, dito, it's 2.9. So, ibig sabihin, kikita bawat shares natin ng $2.90. So, that's good. Okay? Kasi yung number of shares natin, yung common stock standing naman natin, ay konti lang. Okay? So, okay pa rin. Basta, as long as yung earnings available for common stockholders ay mataas, wala tayong problema. As long as mas mataas yon compared with the number of common stock, kikita talaga tayo. This figure represents the dollar amount earned on behalf of each outstanding shares of common stock. The dollar amount of cash actually distributed to each shareholders is the dividends per share or the DPS, which is noted dun sa ating example. Next is the return on assets or ROA. Yan. Na tinatawag din natin na return on investments o ROI. This measures the overall effectiveness of management in generating profit with its available assets. So, ROA o ROI is earnings available per common stockholder divided by total assets. So, ang result is 6.1 based on sa ating example. 6.1%. This value indicates that the company earns $6.01 on each $1 of common stockholders' assets investments. When a firm has preferred stock outstanding, the return on assets can be calculated by all stockholders by dividing the net profit after tax by total assets. So dito, it's 6.4 ang ROA. Return on equity o ROE measures the return earned on common stockholders' investments in the firm. Generally, the owner are better off the higher is this return. So, it's dito sa example natin, it's 12.6. So, the ROE is 12.6, indicates that in 2015, Bartlett earned 12.6 cents on each $1 of common stock equity. Okay? So again, here, some analysts will elect to calculate ROE across stockholders when preferred stock is outstanding. The last in the ratio is the market ratio, which relates the firm's market value as measured by its current share price to certain accounting values. These ratios gives insights into how investors in the marketplace believe that the firm is doing in terms of risk and return. They tend to reflect on a relative basis the common stockholders' assessments of all aspects of the firm's past and expected future performance. So, yung price per earning ratio used to assess the owner's appraisal of shared values. So, lumalabas dito, guys, katulad dito, ang market, ang price per earnings is 11.12. Diba? So, I guess, mataas yun. Okay, mataas yun. Kasi, ang pinag-uusapan natin dito is the market price. Tapos, yung earning per share. So, the level of this ratio indicates the degree of confidence the investors have in the firm's future performance. Siyempre, the higher the PE ratio, the greater the investor's confidence. This time, it's 11.12. So, mataas naman. Okay? So, yung ganun din, it follows yung degree of confidence ng mga investors doon sa company ay tataas din. Market book ratio. This one provides an assessment of how investors view the firm's performance. It relates the market value of the firm's share to its book value. Yan. So, dito, it's $23. O, di ba? $23. So, mataas yun. Di ba? $23. Substituting the end of 2015 common stock price, $32.25 and $23 book value per share of common stock calculated 1.4. This means that the market and book ratio means that investors are currently paying 1.40 for each $1 of book value o ganun. So, dito, lumalabas, medyo, teka, isip-isip tayo. Okay, isip-isip tayo ng konti. Kasi we're paying 1.4 for each $1. Okay? And, yan, activity. Next is the activity number 2 for 20 points. So, ito guys ay naka-upload na rin. Okay? So, pakisagutan na lang, pasensya na. At until now, ay hindi pa nagagawa yung aking connection. As soon as ma-restore yung aking connection, we proceed with our synchronous class. Okay? See you guys. Bye-bye.